Like many ICT traders, I used to look for a trade every single day. As you can imagine, it got me nowhere. Nowadays, I trade 1 day a week and have multiple 5-figure payouts with prop firms. Today, if you stick around to the end of the video, I'm going to show you exactly how you can also trade 1 day a week and finally make some money trading. As usual, we are not going to waste any time. So, what are the rules to this model? The rules are that Wednesday has to be due for expansion. Now, this is incorporating what I call expansion theory. I have a few videos on this, so if you haven't watched them yet, I would head over there just to get an idea of what expansion theory actually is. But Wednesday has to be set up for expansion. Now, you may be asking, Loz, how do we know Wednesday is going to expand? Tuesday tells us this information, okay? So if we have a higher time frame bias, which is number one. Number two, we need Tuesday to make the high or low of the week, okay? When we're expanding, this is often the case. Now, if you take a look inside this price action, we are on ES, which is the S&P. You can see we've been in a sell model. As soon as we change the state in delivery here by closing below these 3 up close candles, we are now delivering sell side liquidity. As we all know, sell side liquidity rests below old lows here, 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 and here, okay? This is where sell side liquidity rests. So once we've changed the state in delivery, we are now looking for sells, okay? What we need to happen is Tuesday needs to make the high of the week, okay? We do have an SMT up here with its correlating asset. So look what happens here. If I make this a bit bolder so you can see, Monday's price action, right? We have a small range on Monday. Look what Tuesday does. Tuesday takes out the high of Monday. So we swept buy side liquidity in a deep premium. Now, why are we in a deep premium? Because we've overextended this much, okay? And we have an SMT at the highs. So we're in a deep premium. Tuesday's candle took the high of Monday's when we're expecting lower prices. Wednesday should then expand. And it does this here. Wednesday is the day I'm talking about, okay? I recommend you only trade Wednesday or Thursday, preferably Wednesday, okay? Because Wednesday usually creates the most expansion from what I've seen. As you can see here, Wednesday expands all the way lower, and then Thursday does as well. If we go into the next week anticipating downside, which we are, because if you take a look here, we have a fair value gap. Okay, what day do we trade up into this fair value gap? On Tuesday. Tuesday trades up into the fair value gap, takes out Monday's high whilst doing so, and we rebalance all of this. So we've offered buy side liquidity. How have we offered buy side here? Offered buy side above old highs and in a premium. Okay, this is our fair value gap. We're offering fair value. We close inside this candle. Look at what Wednesday does. Expands. This is the day you want to be trading. All you have to do is to determine whether it is a skip or a trade on Wednesday is what did Tuesday do? Did Tuesday set us up for Wednesday to expand? Okay. Remember, we're trading 1 day out of the week. This is how simple it can be. If you have a higher time frame bias, and Tuesday has given us the framework to be able to expand, you only need Wednesday. You can catch huge moves on Wednesday, and I'll show you exactly how to do so. Now, I want to dive into some of these days here where we're expanding and show you exactly how to catch these moves, okay? So let's dive into this first example. If we go to the 15-minute chart and we keep the same framework here, you can see that this is the previous day high back here, and we swept the previous day high. So how do we position ourselves in the market? Well, if you take New York midnight, because this is a key time, remember it's time first, then price. We want a Judas swing, okay? We get a Judas swing here as New York midnight opens up, and another one here, and then a stab higher, and then we drop. As soon as we get this displacement down, this confirms to me that we are going lower. So where can we look for sells? if you take a look in here, we displace with a fair value gap. When we displace this much, okay, when we displace this much and we've got targets lower, we should not retrace all the way back up here and then drop lower. We should look for sells inside the fair value gap that's displaced, okay? And you can see here, we would sell here with our stop above all of this, because all of this can offer fair value. We can come up here. We need to make room for it to come up here, but it's not necessary. So we sell from there, and this is all happening on Wednesday. If you sold from here, you don't even have to catch it up here. If you sold from this point, you would catch a move of about 60 points on ES, which is a huge move, okay? You can catch this. This would be if you put your stop loss here, a 1 to 4-ish. A 1 to 4 can pass some prop firms, okay? If you wait all week for this and then risk 1.5%, you can nearly pass the whole challenge in one trade, just waiting for the right conditions. The next day, let's dive into the next day, the next week even, but on Wednesday, of course, okay? Wednesday opens up over here. Remember, Tuesday needs to set us up for this. So what happened on Tuesday? Remember, that's our fair value gap that I'm getting rid of now. Monday is here. So the high on Monday is put in at this point. Look at what Tuesday does. Tuesday expands higher, takes out the buy side liquidity into an area of fair value. You can see this order block here. If we drag that across, you can see this gray area is the last up close candle before a drop down. So what actually happened over here? We delivered sell side, delivered buy side, and then sell side. So all of this area above here has been offered fair value. So the algorithm is efficient here. This is inefficient price action. We may return to this point. Order blocks are like a check mark, or a bookmark, sorry. Order blocks are like a bookmark that the algorithm will refer to. How do we know it will refer to the order block? If you take a look, when we have lots of resting buy side liquidity just below a bearish order block, that is a key sign that we may trade back up into it, because we've swept buy side into a key level. That is exactly what Tuesday does. And then we break lower. You can see we get the 2022 model here, which is displacement below a swing low, a high, low, high, high, low, low, which is also a breaker block. Okay. We then come up, mitigate the fair value gap, and that is a sell. If you miss that move, you would go into Wednesday expecting the same thing. Wednesday, we are expecting expansion theory. So we begin to consolidate, okay? This is all inefficient price action. There's no displacement here, and that is exactly what we're looking for. We need displacement. 8:30 opens up down here, okay? This is 8:30. So when we don't have a Judas swing at midnight, as you just saw, this is midnight, we had a drop and then started to consolidate. When we have no Judas swing at midnight open, we look for 8:30 to give us a Judas swing. And that's exactly what happens. If you mark out this opening prices are so key, because when we're expanding, okay, under expansion theory, we need a dynamic premium and discount. Opening prices give us this dynamic premium and discount. You can see what happens here. Displacement, 8:30. We rally up to mitigate the fair value gap here, which is also above 8:30 opening price. So what have we actually done? We've displaced, breaking a swing low. So we've given our direction. The algorithm is tipping its hand. We have a fair value gap above 8:30 open, which is a dynamic premium now. A dynamic premium is here. This fair value gap is a sell, and you can see how far we drop just off of that. On what day? On Wednesday. Wednesday is the easiest day to trade if Tuesday has set us up for it. It really is that simple. When we're anticipating expansion weeks, Tuesday we want to create the high of the week. Now Wednesday may sometimes, but about 80% of the time, 70% of the time, Tuesday creates the high or low of the week. So all we need to figure out is how we can expect expansion. How do we anticipate an expansion week? Well, let's dive right into that now. So the next section will be about how to anticipate expansion weeks. You can see here, we're obviously on the weekly chart. You want to know, how do we know when a week is going to expand? We need some criteria first. We need premium and discount, and we need sell side liquidity swept if we're bullish. So take a range. We need a dealing range first. So we have an impulsive price swing up and then we drop lower. We need a premium and discount. You can see, okay, we have a price swing here and then a drop. Where does price come into? Equilibrium. If I spin this around, because this is meant to be the other way, there you go. We have discount and we have premium of this price swing. Why this price swing? Because this took out sell side liquidity and this took out buy side liquidity here and here. So once we drop down, we are now offering fair value. You can also see this fair value gap over here, because we cut through candles. This fair value gap is used on the other side as support, okay? But look, what we're looking for, remember I said we need to sweep sell side liquidity, okay? Sell side liquidity in a previous week low. Look at that. So we swept sell side liquidity in a discount, and then we closed inside the previous candle. The following candles, until we take out the swing high, so this price swing down, until we take out this price swing high, the following candles we anticipate expansion occurring. So expansion on this week, expansion on this week, and the following weeks until we take out the high. Okay, then let's reposition ourselves. Impulsive price swing up. A range. We have a dealing range, okay? All throughout here, until we take out this swing or this swing, we're expecting expansion. And then once we start to reject and we start getting strong down close candles, you anticipate us trading back into the range. All throughout this, whilst we're waiting for price to get into a discount, you can be trading a different asset, okay? You are not missing out on any moves. Forget about that. You can be trading Forex for a month or two. The same thing happens over there. I'm just teaching you on ES right now. So, dealing range. Remember, impulsive price swing up, and then we start to come down. Once we drop down into a discount, now we can start looking for expansion theory to happen. We missed the fair value gap here, but we come down into two down close candles just before another swing up. So why did we miss this fair value gap? Okay, we mitigated it here. We didn't just mitigate it, but we fully filled the imbalance. Okay, as you can see, the down close candle that fully filled the imbalance before the price swing up is what price is referring to. Remember earlier in the video I said that order blocks are like bookmarks. The algorithm will refer back to these, and you can see just here that is exactly what we do. We refer back to it, and we swept sell side liquidity into it. Where is the sell side liquidity? Below these lows. This low here got swept into the order block, okay? And then we expand. Did the candle close inside this one? No. So you may have missed it, but we did sweep sell side liquidity into a discount. The next candle, we have a strong move up, and we close above this previous candle's high, okay? So once we close above the high, we can now do the exact same thing and anticipate expansion theory all the way until we take out the buy side liquidity on this impulsive price swing. Expansion week, expansion week, expansion week, expansion week, expansion week, and then expansion week, okay? And we get about a 100 pip run above this high, okay? So all throughout here, you have 1, 2, 3, 4, 5, 6. 6 weeks we're anticipating expansion. Out of these 6 weeks, how many were down close? 0. Because we lined up the logical framework, and therefore we could actually aim for this, and we knew where the market was actually reaching for. So why here? You may be asking, why here did price not come into a discount? Because I'll tell you why. This fair value gap, okay, this fair value gap is forming as we are about to break out of this high. Okay, you can see this is a long-term high. If you look at this, we have a price swing and then we start to rally. Once we're this close to a high, we don't anticipate big pullbacks. When we're down here, we can anticipate a pullback. When we're down here, we can anticipate a pullback. But once we are this far up in the range, what range am I talking about? This range, okay? Once we are this far up here, okay, and we've taken out the range high, if we have a fair value gap just below it, and we're still anticipating price to run higher. Now, what was driving this market higher at the time? We have all-time highs, okay? If we are to break all-time highs, is it likely that we just pump above it and then drop again? No, we need to make new all-time highs, okay? It's more likely that we expand higher, and that is exactly what happens. What sets us up for this? If I change the color of this to make it more obvious, you can see we break the high, and then it lines up with a fair value gap. When does support and resistance work? Support and resistance works when the high broken lines up with a fair value gap. And that's a gem. Note that down. That's what support and resistance misses. That's why sometimes these people make money. Sometimes these traders who it seems they have no logical framework make money. They make money because they don't realize the high is paired up with a fair value gap. And they make money because they have strong risk management. If you have impeccable risk management and you flipped a coin for every trade, you would make money. As crazy as that sounds, it's true. Okay, so once a fair value gap lines up with a broken high, you know we shouldn't retrace all the way down into here, paired with the logic that we are at all-time highs and we want to make new all-time highs. So once we mitigate this, we can anticipate expansion. Did this candle close inside here? No, so we wait. This candle didn't close above this one. You can also wait again. But then we drop down into a discount of here. This is a price swing on a lower time frame. So this offers discount. We're offering fair value. And then we expand. As soon as this closes above all of these, now we are looking for expansion. Expansion week, when we mitigated a fair value gap as well. Expansion week, and then we get one down close week, okay? So this may have been a losing week, which is fine because we just took 3 winners. Expansion week, indecisive week, expansion, okay? 2 weeks out of about 8 there, okay? I'm not counting, but about 8. 2 weeks out of 8 are the only losses you would have taken. Look how easy it is once we've offered fair value and we've developed framework and logic. Framework based around logic, this becomes easy, okay? And you would do the exact same thing over here. So this is exactly how you anticipate expansion weeks. Once we're anticipating expansion weeks, you can dive into the daily price action, and Wednesday often gives us a huge price swing, okay? Wednesday is the day to trade. It's as simple as that, especially if Tuesday has made the low of the week. Wednesday is the one to expand. Wednesday is the easiest day for expansion theory, okay? So dive into your own charts, and I encourage you all to go into your own charts and find this. Find weeks that are likely to expand. Remember, I have so many videos on how to develop framework, how to develop logical ICT-based framework, and how you've learned now in this video how to anticipate expansion weeks, okay? Once you're anticipating an expansion week, Wednesday is the only day you need. You literally need 1 day a week, and I'm not even exaggerating when I say that, because you can pyramid in on these days. Think about if Tuesday took out sell-side liquidity below Monday, okay, and now we're anticipating Wednesday to expand. You could drop to a 15-minute chart, and using the opening prices I showed you, every Judas swing you could buy. Below New York midnight, that's 1 buy. During London session, that's 1 buy. During New York session, that's another buy. That's 3 pyramided positions that are all winners in one expansion candle. A lot of people won't have made it this far into the video. That's why I kept this until the end. Okay, you guys who stick around and watch all my videos, I really appreciate. So I wanted to drop a little gem there. Use the opening prices when we're anticipating this expansion on Wednesdays as pyramid entries. So below New York midnight, below 8:30, that's two of the easiest entries you will find. Have about a 30 pip stop loss or so, okay, and then ride the expansion. And Thursday usually caps the weekly range, okay. So that's a little bit of source you can go test out in your own charts. Now, again, I appreciate you watching to the end of this video. If you did enjoy, please do drop a like, drop a comment with any suggestions you want me, any suggested topics you want me to focus on. And yeah, subscribe if you are new and you are enjoying the content. Check out my previous videos and the links in my description. I'm always active on Twitter and Telegram. And yeah, thank you as always for watching. I will catch you guys in the next one.